Well, the Bank Nifty, in fact, is dragging the index today. That is lower by close to around 150 points, doing a relative underperformance in today's trading session. But Kotak Mahindra Bank, just in the last 5 to 10 minutes, that's recovered from the low point of the day. So keep an eye out on that one. That's staging a bit of a fight back. It's moved to the high point of the day. So I think you keep your eye out on that one. But plenty of stocks moving and shaking. So let's get straight to our movers and shakers segment. Mangalam joins us to run us through what brokerages are making of that big deal that was announced yesterday. Mangalam, tell us about HUL.
Absolutely. So the brokerages are more or less positive. The stock, though, has come off the highs of the day, currently in the red as we speak, primarily perhaps on account of some profit taking as well. It is sitting at record highs. So the key positives, of course, are that this deal will be EPS accretive to the tune of 5, 6, 7 or 8%, depending on the brokerage you're looking at. Deutsche Bank expects it could be around 5 to 6% increase in the EPS. They have upgraded the stock. Another brokerage that we have Jefferies. They maintain their rational view. They believe while this will increase the EPS by about 5 to 6%. The positive is that it enables HUL to leverage on the cost efficiencies as well as increase the distribution. However, the negative part is that it is uncharted territory for HUL, the product category that it is in. And at these valuations, perhaps there is very little room for error. So let's see how that goes. Apart from that, Citi also believes that there could be a 4% EPS accretion, and Phillip Capital, they believe that the EPS accretion could be anywhere around 18 to 19%, and this is if you account for the synergies. They have upgraded the stocks too. So brokerages by and large happy. The stock of the highs of the day, given it's at a record high.
Okay, thank you very much for that. A bit of profit booking in today's trade. Let's hear out what the managements of both the companies had to say.
This is a great deal for GSK PLC shareholders, but also importantly GSK Consumer Healthcare shareholders here in India who are getting a premium. And also Unilever and Hindustan Unilever is a fantastic company. Clearly here in India they have a very famous heritage and fantastic distribution capabilities. So we're delighted, having owned these brands for over almost 100 years, to divest them to Unilever and Hindustan Unilever, and we hope they can take them forward for the next 100 years.
We will increase penetration with special focus on rural markets and emerging channels, and expand our offerings to the fast-growing premium segment. There will also be focus on looking at future-ready formats in line with consumer trends. Our direct coverage is at 3x GSK, and our tech-led capabilities will be a growth multiplier. On the cost side, we see significant benefits across the value chain, and the transactions will be margins and EPS accretive to HUL. Our F&R business post the proposed merger will cross the 10,000 crore mark, making us one of the largest players in the country in the F&R space. We expect the transaction to be completed by December 2019, subject to necessary regulatory approval.
Okay, Sun Pharma's management had a con call late last evening and they were trying to put out various clarifications. But the stock, after opening up in the green, that's come off the high point of the day, currently down 3% from the highs of the day. Sonia is with us. She's going to run us through all those details. Sonia.
Oh, yes. The uncertainty with respect to the whistleblowers' complaints continue. And that's the overhang on the stock that we're looking at right now. The positive was that Dilip Shanghvi himself came onto the call last evening and assured investors of a highest level of corporate governance going ahead. He also said that the company is willing to make changes in their business transaction to increase transparency. On Sudhir Walia's issue, he said there is no operational involvement of Sudhir Walia. He advises only on strategy, sometimes on finance. However, the big bone of contention really is that 2,200 crore loan that Sun Pharma lent out to a non-related third party in FY18. Management did say that this is just a business transaction. The loans are given as a part of the pharma business and that they will relook at loans to employees if it is not in the shareholders' interest. However, the whistleblowers' complaint was a 150-page document. The management has not given a lot of answers to many questions that were put forth, and that's where the uncertainty lies. Citi says they need more clarity on the content of the report and the potential bearing of the business. Jefferies has a hold rating. They have a target price of 535 on the stock. They say that while most issues appear dated, it may still remain an overhang. It's also that not that the valuations are inexpensive. They're still trading at 20 times FY20 PE, so it's not a cheap stock. And the management responses may leave the market with mixed feelings. So clearly, some unanswered questions. Edelweiss says that there seems to be no end to the company company's woes. Many issues are dated, but enough to question the track record of the company. And as we know, when there are corporate governance issues, it spooks investors the most. That's the reason the stock is under pressure.
And what a slide it's had. It's down nearly 20% from its 52-week high that it hit just 3 months ago from levels of close to about 680. 3-month chart will also come up for you on your screen. On that note, let's listen into what the management had to say on the conference call yesterday.
Sun Pharma's relationship with AML is on arm's length basis. As investors have expressed a concern regarding this arrangement, we are in the process of discussing various other options for undertaking domestic formulation business. We are open to the idea of changing this distribution if, based on our interaction with investors, we get a feeling that that is what will make them comfortable. Another issue pertains to Sun Pharma lending some money to 4 individuals without security. This is also 20 years old, which happened in 95-96. The amount of money involved also was very small, a few lakh rupees, and was fully recovered. It's also pertinent to note that these 4 individuals were investigated by SEBI. The appeals tribunal in 2002 has actually given a ruling in favor of these 4 individuals.
All right, and keep an eye out on the Sun Pharma stock, but also keep an eye out on the futures as well. You know, for the current contract, the total open interest is more than 5.4 crore shares, approximately in that mark. Normally, the open interest out there is at around 3.2. I've seen it in the past. In fact, at the start of the October series as well, I remember the total open interest was only around 3 crore shares odd. So 5.4 crore shares is a very, very heavy in terms of open interest. Keep an eye out on that mark as well, telling you that volatile times ahead for the stock as well. But let's move on then, and Mangalam joins us to tell us about Shankara Bilpro. Well, Mangalam, the stock is down, close to 70% from the recent peak. Brokerages as well now cutting estimates, downgrading the stock?
Absolutely, Nigel. You know, 75% from the peak. It's lower in today's trading session, down about 25-26% in just the last 10 days as well, and 75% lower from its record levels. The brokerages, they listened into the conference call as well that took place on Friday. We were talking about it, where the management did cut their retail business guidance margins from about 10-11% to about 6-8%. The stock fell about 3.5% from there, was lower yesterday and is lower today. Kotak's written a note. They say that this reduction is much more than expectations, because of which they have to revise their FY19 and FY20 EPS by about 38 to 41%. So they've outright downgraded the stock from buy to sell. On the other hand, interesting note coming in from MK last evening that the sharp reduction in margin guidance, again, that is their big contention. And given rising concerns over the company's business and lack of clarity, they've suspended their coverage on the company. So after a lack of clarity, after EPS cuts coming in, and after brokerages being negative, the stock is seeing a bit of a scramble to the exit door. And that's primarily because if you take a look at the company's shareholding pattern, nearly 28% of the company's total shareholding is on account of institutions. And of those institutions, 21.6% are with the FII. So let's see whether people are really rushing towards the exit door, and which is causing that aggravated sell-off in the stock, and up until when does it continue, because the shareholding pattern was as of September. December shareholding pattern is something that we'll be watching out for very closely.
Thank you, Mangalam, for that. It's now over to Yash, who's going to tell us why he's watching ICICI Lombard. Yash?
Well, of course, Rima, ICICI Lombard is a stock which is in focus. The stock is trading with gains of about 4.5%, and that is purely on the base of certain reports which essentially suggest that the insurance regulator, IRDA, might give the autonomy as far as the pricing power is concerned in the motor third-party segment, essentially deregulating the motor third-party segment, where insurance companies will be allowed to decide the premium amount which they want to charge to the policy holders. Of course, just to put things in context, 2 parts of motor insurance: motor own damage and third party. own damage is where the space which is deregulated and insurers decide the pricing, but third party is regulated and the regulator decides the pricing. But of course, the report suggests that that autonomy would be given to insurance companies. So that is purely working in favor of insurance companies, and we are seeing the stock trade the way it is trading today with gains of about 4.5%. But I've been talking to some of the analysts and companies. They also tell me that if that happens, that is still far away, that particular decision. There'll be a consultation paper and it will at least take 2 to 3 years for the regulations to come in. But just based on the reports today, the stock is trading in the positive territory.
Okay, all right, Yash, thanks so much for that. Well, here's a quick recap of all the top buzzing stocks that we just covered. We have Big Boy, Hindustan Unilever, Sun Pharma, Shankara Bilpro, as well as ICICI Lombard. On that note, we'll slip into a short break. You come back, we'll get chatting with the management of Maharashtra Seamless. Remember, the company won a big order of around 900 crores from ONGC just yesterday.